Hello guys. First I'll introduce myself. I am Dr. Ambuli, working as Associate Professor in SRM Institute of Science and Technology. Now I am going to discuss about the topic is nothing but accounting cycle. In the accounting cycle, we are going to discuss about the three cycle, that is journal, ledger and trial balance. So this accounting cycle we are discussing from the meaning of accounting or definition of accounting. So when you say as a accounting is art of recording, classifying, summarizing, finalizing and interpreting the result should be communicated to the all interested parties. So when you say as accounting, so the first cycle starts from recording. So whenever the transaction involved in the business with money related information, all those information you have to record by following the first steps in accounting cycle is nothing but journalizing. It is called as recording of transaction in book of accounts. Then after recording the transaction, we have to classify those transaction in a various groups which are in similar category. So in the accounting cycle point of view, that we can call as transferring the transaction from journal to the ledger, that is called as ledger. In the ledger, we have to maintain various accounts based on the information which is available in the recording of journal. So in the third steps, whatever balance in the various account in the ledger at the time of classifying, so those balance may be debit or credit balance that we have to transfer in a statement called as trial balance, that is nothing but the third cycle. So now with the help of this the example, I am going to explain how the transaction has been recorded and posted into ledger and summarize those balances in the form of statement called as trial balance. So here in this problem, Mr. T started book selling business on 1st January 2018. So the following of the transaction has occurred in his business in the month of January 2018. The first transaction started business with cash rupees 3 lakh. So already I said whenever the transaction involved with money, those transaction only we can record in the book of account. So the first transaction started business with cash of rupees 3 lakh. So here when you are passing a transaction, when you are recording a transaction, we have to follow the accounting rule that is based on the type of account involved in the transaction. So here Mr. T started a business with a cash of 3 lakh. So Mr. T started his business with cash of 3 lakh. So whenever we are preparing account, we have to prepare the account based on the business point of view, not on the individual point of view. So here, so T started a business with a cash of. So here the T is contributing some amount and in the form of cash. So two important variable in this transaction is nothing but T and the next one will be cash. Okay, so how the first transaction will be recorded in the book of accounts. See here, so T is a person and cash is a asset. So when the person involved in the transaction, you have to follow the personal account rule. So as per the personal account rule, debit the receiver and credit the giver. Here T is giving the amount, so you have to credit the in the transaction in the form of T's capital account. And cash is an asset, so you have to follow the real account rule. So real account rule says that debit what comes in, credit what goes out. So as per the business point of view, cash coming into the business, so we are debiting the cash account. So on 1st January, when you are passing a journal entry, we have to follow these columns: date, particulars, ledger folio, debit and credit. So in the year, in the first one, transaction involved on January 1st. So all these transactions involved in the same year, in the same month. That's why I mentioned in the date column 2018 as a common and January as a common one. So first it's happened. So first I mentioned here. So I am passing the journal entry. So cash account data to T's capital account. In the debit column 3 lakh and the credit column you have to write 3 lakh. Then within the bracket you have to explain about what is happened in this transaction. So here the explanation of the transaction only we can call as narration, that you have to write in a within a bracket. So yeah, Mr. T started business with the cash. Okay, the next transaction, open a bank account by depositing 2 lakh. So the business open account in a bank by depositing 2 lakh. So from the business, the cash is deposited in a bank. So bank is a person account and cash is a asset account. Okay, so bank is an artificial person, you have to follow the personal account rule. So by depositing cash is an asset, you have to follow the real account rule. So from the business point of view, so the cash is going out from the business. So as per the real account rule, debit what comes in, credit what goes out. The cash going out from the business, so you have to credit the cash account on January 2nd. Then, so as per the personal account rule, bank is the person, artificial person. As for the person, debit the receiver, credit the giver. So bank is receiving the amount from the business, so you are debiting the bank account. So bank account data to cash account. So what is the amount deposited by the business to bank? 2 lakh rupees. That's why I am writing in the debit and credit column. In order to explain this transaction, within bracket I am writing cash deposited with the bank. The next transaction is nothing but goods bought from Tamil Nadu Textbook Corporation for cash rupees 10 lakh. So here goods as purchased. Whenever any asset as purchased, means we have to mention the asset name only. Whenever if it's goods is mentioned, you have to see about what type of activity with respect to goods. So good bought, so it's nothing but purchase. So what is the activity here? Bought is nothing but purchase. So when you purchase something, when a business purchases something, it's nothing but the expense. So whenever it's the expense, you have to follow the rule is nothing but nominal account. Then from where they are purchased? From Tamil Nadu Textbook Corporation, but they are purchased for cash. The next variable is cash. So cash is an asset, it's a real account. So real account rule says debit what comes in, credit what goes out. So when a business purchases something, they are paying cash. So cash is going out from the business. So you have to credit cash. So purchase is an expense. So as per the nominal account rule, debit all expenses and losses and credit all incomes and gain. Purchase is a expense. So here I am debiting purchase and crediting cash account. Then in order to explain the transaction, I'm mentioning the narration, good purchase for cash from Tamil Nadu Corporation. Also you can mention like that. So what is the value of goods they have purchased? 10,000 rupees. So that's why I'm writing debit column 10,000, credit column 10,000. The next transaction is nothing but it's happened on 15th of January. Sold goods to Trader for cash 5 lakh. So here again the goods, the transaction involved with goods. So goods means you have to see what is activity take place for the goods. Sold. So sold, whenever anything they are sold is nothing but the income. So here is a income. So you have to follow the nominal account rule. So as per the nominal account rule, debit all expense losses and credit all income and gains. So I have to credit the sales. Then from where they are sold, to whom they are sold, Trader, but not for credit, for cash. So they are receiving cash, the business receiving cash. So the cash is asset, is a real account rule. Debit what comes in, credit what goes out. So when the income they are receiving, so it is the cash entering into a business. So I have to, cash is asset, debit, that is you have to, as per the real account rule, you have to debit the cash account and credit the income is nothing but the sales. See here, cash account data to sales account. So what is the value of goods they are sold? 5,000 rupees. So I am writing the debit and credit column. In order to explain the statement, goods sold for cash. The next transaction, it's happened on 22nd of January. Purchase goods from XN company for 15,000 and the payment is made through net banking. Guys, here see the transaction, 15,000 the value of goods purchased. So whenever is anything good with respect to goods, so what is the activity they are made? Purchase. So whenever is purchase or bought, you can treat as expenses. When it's expenses, you have to follow the nominal account rule. So nominal account rule says that debit all expenses losses and credit all income and gain. Purchase expense, so I have to debit purchase. Then not they are paying the form of cash directly, they are transferring the amount through net banking. So net banking, who is to carry out the transaction? The banker. Okay, so you have to do the transaction through bank. That's why you have to mention here, instead of cash you have to mention the bank. So purchase account data to bank account. Goods purchase and payment made through net banking. Bank is nothing but through net banking only the business paying. That's why we have to whom we are paying to bank. Then similarly, in order to explain the transaction, goods purchased and payment made through net banking. The next transaction is happened on 25th of January. The transaction sold goods to YN company for 30,000. So this business selling goods to YN company for the value of 30,000, but they are receiving their payment from YN company through NEFT. So they are not directly receiving cash from YN company. Through bank they are receiving. That's why what you have to do, so you have to mention bank. So you are getting money through bank. So bank account data to sales account. Goods sold and the payment is received through NEFT. So any transaction involved through bank, that instead of cash you have to mention bank. If they are paying through check, if they are paying through demand draft, or if they are net banking, they are transferring the amount, or NEFT. So whatever is happened, the transaction happened with the dependency of bank, you have to mention the bank only, not the cash. Okay, so by following this, so these are the transaction you have. This you have to transfer to the next step is nothing but ledger. So you have to classify the transaction or grouping the transaction and you have to post it into ledger. So here see the transaction. So the first transaction involved with cash. See how many transactions involved with cash. January 1st, the transaction involved with cash. January 2nd also, the transaction involved with cash. See here the cash. Then January 5th also the transaction involved with cash. January 15th also the transaction involved with cash. So 4 transaction involved with cash. These 4 transaction cash we have to group into a account called as cash account. See here I prepare the cash account. See here the first account is cash account. When you are preparing a ledger, we have to follow these are the columns. So date, particulars, journal, from which journal you are transferring, that page number of journal you have to mention here in the journal folio column. Then you have the amount column. So this is one side of the account. Account always have two sides, debit and credit. So date, particular, journal folio and amount, this is one side. So this is, see here, that is on the left hand side. This is nothing but your left hand side, or we can call this debit side. Then again you have to write on the notebook, that is on the side is nothing but the date, particular, journal folio and amount. That is nothing but your right hand side of your notebook, that you can call as credit balance. Okay, see here. So whatever transaction, because I'm opening a cash account, whatever transaction cash, all those you have to transfer in this account. See, I already said the 4 transaction that you have to transfer here. See here the first transaction. See here the first transaction. The cash is debit or credit. So cash account data to T is capital. So first you have to see whether the particular cash is debited or credited. If it is debited, you have to write this transaction on the credit side of your cash account. See here is cash account is debited. Now see how I am in the account. Just you can see. So cash is debited in the journal. I have to write on the credit side. Sorry. You have to write on the debit, the cash account is debited. So you have to write on the debit side of your cash account. So here, so what you have to write, you can't write the cash again here in a cash account, in your cash account. So what you have to do, what is the opposite transaction, journal transaction in the particular entry? Cash account data to T is capital. Cash is debited. So in the cash account, you have to debit side or left hand side. Debit side and left hand side are one and the same. So on the debit side or left hand side, you have to write not the cash, you have to write T is capital. See here, I have written like that. See here, January 1st on the debit side to T is capital account. T is capital account. Then see the next transaction. The next transaction involved with on January 2nd, bank account data to cash account. So cash is credited. So you have to write on the credit side of your cash account by the opposite transaction bank. See here. So January 2nd, it's cash is appear in your transaction on the credit. So I am writing on the credit side by bank. So when you are preparing account, the account always on the debit side start with 2. On the credit side, you have to start. You always start with 2. In the credit side, you have to start with by. Always, this is a mandatory for while preparing account. Okay. Then the next one. See the next. What is the next transaction? The next time, because 4 transactions involved with cash. See, the next transaction involved with cash on January 5th. So it is all the cash on the credit. So you have to write on the credit side by purchase. See here. On the January 5, on the credit side, you have to write by purchase account 10,000. Then the next transaction involved with on January 15th, cash account data to sales. So the cash is debited. You have to write on the debit side of your cash account by the opposite entry to sales account. So January 15 to sales. So the 3 lakh rupees. Okay, 5 lakh rupees. Okay. Now here, so only these 4 transactions. All the 4 transactions are posted in the cash account. Now what I have to do, I have to balance the cash account. So I have to total the debit side and credit side. Debit side, there are two values, 3 lakh and 5,000. 3 lakh 5,000. Debit side total 3 lakh. But credit side total, if you add it and see, 2 lakh plus 10,000. 2 lakh 10,000 only is available. So which is higher value? 3 lakh 5,000 is higher value. That's why I have to write the total as 3 lakh 5,000 on the both the side. Then which side the difference, which side that is less, that side you have to find out the difference between the total and the value which is available here. So 3 lakh 5,000 minus 2 lakh 10,000 will get 95,000. So 95,000 is nothing but the brought down balance. So you have to write by balance carried down. That you have to write, bring it to the next month, February 1st, to balance brought down 95,000. Okay. Similarly, you have to prepare the other account. See the next account in your transaction. The first transaction involved with cash. First entry with cash, so I am written cash. The next one, T's capital account, you have to prepare. So see whether the transaction involved T's capital. No. Only one transaction involved T's capital. But even though that you have to prepare. See here, I prepare T's capital account. So T's capital account. So T's capital account will appear on the credit in the journal entry. So I have to write on the credit side by cash, because opposite transaction in the journal is cash. So by cash account. So 3 lakh rupees. So only one transaction. I have to close the account. So this side we have 0. That's why I am writing 3 lakh. So I have to total 3 lakh rupees. This side 0. So 3 lakh is higher. 3 lakh I am writing as a total value. So the difference here nothing. Here no value. So the 3 lakh itself is a different. That I have to write to balance carried on. Which amount is a different, that you have to write always as to balance carried on. That you have to brought down to the next month in the opposite side. See here also 95,000 is the difference you are getting on the credit side, that you have to write or transfer to the next month in the debit side. Opposite side only you have to write that. Then the next, what is the next transaction involved? See here, the first one, cash and T's capital. So here bank, cash already we have completed. So bank only is there. So you have to prepare the bank account. See how many transactions involve bank you see here. January 2nd you have a bank account. Then January 5th there is no bank account. January 15th also there is no bank account. January 22nd you have bank account, you have credited, and January 25th you have bank account on the debit. So you have to prepare a bank account. See here, the next one is bank account. So here the bank account, the first transaction involved with, the first transaction involved bank. It's a bank, you are right, yeah, the transaction written on the debit balance, debit bank account data. So you have to write you have to transfer on the debit side of your bank account. See here, the debit side, January 2nd. So what is the opposite transaction? To cash. That's why I'm writing to cash, the 2 lakh rupees. Then the next transaction involved with the bank. So January 22nd. So bank is credit, you have written on the credit. So you have to write on the credit side by mentioning purchase. The opposite transactions are available. So January 2nd by purchase. Similarly, the next three transactions involved is bank. So bank account data to sales. So bank you have debited. So you have to write on the debit side by mentioning the opposite transaction to sales. Then you have to total debit and credit. Debit side you have 2,30,000. Credit side you have only 15,000. So what you have to do? You have to, so the higher value you have to write as a balancing value. So here the 2,30,000 I am writing. The difference I am getting is 2,15,000. That I have to mention the difference always carry down. Balance carry down. If it appear on the debit side, the difference you have to write to balance carry down. If the difference appear on the credit side, you have to write by balance carry down. Then the opposite side you have to bring it. So in the next month, to balance brought down 2,50,000. Then next transaction, see what is the next transaction? Cash we have completed. capital we have completed, bank we have completed, cash already, and so we leave it. So next one will be purchase. So how many transactions involve purchase? You have to see. So here how many transactions? So January 5th you have purchase and January 22nd you have purchase. So two transactions involved in purchase that you have to group into one account, purchase account. So here in the purchase account, so I have written, so purchase all with the transaction involved with purchase. So we have a purchase on the debit. So you have to write on the debit side to cash. See here, see the account, purchase account to cash. Then 10,000. The next January 22nd also you have a purchase that also will appear on the debit. So I am writing on the debit side to bank. To bank. Then only two transactions. I have to total that here 25,000. This side is 0. So 25 is the higher value. I am writing as the balancing value as 25,000. So the difference I am getting that I have to write by balance carried on. Then that you have to bring it to next month to balance brought on 25,000. Okay. Then see the next transaction in journal. That is, we have completed purchase, already we have completed cash already we have completed. Now we have to see sales. So you have to prepare the sales account. So how many transactions involve sales? So January 15th and January 25th. So sales, both the sales appear on the as a credit. So you have to, while preparing account, you have to mention on the credit side of your account. So credit side, the first transaction you have to write January 15th by cash 5,000. The next one, the January 25th by bank 30,000. The total 35,000. The debit side there is no total. So the difference we are writing 35,000 as two balance carried on. That you have to bring into next month on the opposite side by balance brought on 35,000. Okay. So like this you have to prepare the, or you can group the item into in a similar account. You have to prepare an account. Okay, then based on the ledger we have to prepare a trial balance. So trial balance is nothing but a statement which contain 5 columns: serial number, name of the account, ledger folio, debit and credit. So here the main purpose of preparing trial balance, you have to see whether there is arithmetical accuracy or there or not. You have to identify by following the whatever step you have followed, journal entry and ledger. See, take each account. What is the balance you are getting? See here. In the cash account, this is a cash account. So in the cash account, the brought on balance, which side will appear? Debit side. So I have to write the value in the debit column. So first what you have to do, the serial number, you write 5 account you have prepared. So I am mentioning 5 account, 1, 2, 3, 4, 5. The name of the account I have to make cash account, T's capital account, bank account, purchases account and sales account. By seeing the balance you have to write the amount. So cash account, see the balance shown on the debit side next month. Brought on balance which side will appear, that based on that only you have to write. So brought on balance for cash account on the brought on to balance brought on. So which side? Debit side. So 9. So I am writing in the debit column. See the next one. T is capital account. The brought on balance appear on the credit side. So I have to write in the credit column 3 lakh. See here, just I am showing that. So cash debit column. Then T is capital, we have the brought on balance on the credit column. That's why I am written. Then bank account. So see bank account 2 lakh, which column will appear? Which side will appear? Bank account. The brought on balance will appear on the debit side 2,15,000. That's why I am writing on the debit column 2,15,000. The next one purchase. See the purchase debit where the brought on balance on the debit side 25,000. That's why I am mentioning on the debit side 25,000. Then the last account, sales account, the brought on balance on the credit side 35,000. That's why I am mentioning 35,000. Now you total the debit and credit, you will get the same total. That says about the whatever you have maintained account in the first and second step, there is no arithmetical mistake or arithmetical error. In order to prove this, only we are preparing the trial balance. So today session we have discussed about the first three steps in accounting cycle: how to record the transaction, how to group the transaction, and how to summarize the transaction in the trial balance statement. So next session we'll see about how to prepare the finalize the transaction by preparing the trading account, P&L account, and balance sheet. Thank you guys.